Hi everyone, you're very welcome to this recording. So I'm gonna go through the 2023 higher level final company final accounts sole trader question. So I've already set up my trading profit and loss and my balance sheet as you can see here. So this is my trading profit and loss and this is my balance sheet. Okay, so if you're not sure about the setup to those, then I'll just link a video in the description and you can watch that and just set it up in the exact same way every time. So this is how you're going to set it up if you encounter a sole trader question in the exam. Okay, so that would be step one, would be to set up your accounts. Step two then is going to be transferring all the items from my trial balance, you can see on the left here, into my balance sheet or my trading profit and loss under the appropriate heading. Okay, so I'm going to start into that now. Okay, so first one we have here is patents. So patents is an intangible fixed asset. So I'm going to pop that under this heading here. Okay. And in brackets, I'm always just going to put whatever the figure from the trial balance is. And then we can do our adjustments in the bracket also after that. So I'm just going to put it in, write it a little small. So all there is, write these kind of just take up only half the space. So you've got an extra bit of room here to do another little bit of a work. And if you run out of space over here. So I'd always recommend just writing it in a little smaller than you normally would. So 48,800 there. Okay, land and buildings. So this first line for land and buildings represents the cost of the land and buildings. So we've got the accumulated depreciation on land and buildings just under that. So we're going to assume that this is the cost here. Okay. So I'm just going to write L plus B. It's perfectly okay to use a bit of shorthand in this question here. It'd be more in the published accounts question. You need to use the full terms, but here a bit of shorthand is perfectly fine as long as it's clear what you're referring to. Okay. Excuse me. So then I've got accumulated depreciation on land and buildings. So I'm just going to come across around halfway here on this line and open up another bracket for that one. And I'll just pop my 105,000 in there. Delivery vans then, 480,000. So that's cost again for delivery vans. So delivery vans, 480,000 cost. Okay, and I'll come across halfway again, 70,000 for the accumulated depreciation. Next, we've got equipment at cost 153,500. So equipment, also a tangible fixed asset, and that's 153,500. Okay. Then I've got discount. So this is discount on the credit side, meaning it's a discount received. So that is an income. So we're going to pop that into my trading profit and loss here under the add operating income heading I have here. Okay, if that was on the debit side, that would be a discount allowed, a discount we've given to our customers. So that would be an expense in that case, and you'd put it under selling and distribution costs because it would be seen as being a selling cost. So that's where you'd put it if it's on the debit side. But in this question here, since it's on the credit side, we're going with add operating income, 7,700 there. Okay, next one here is 4% investments. So that's 180,000. So investments are a financial asset. So I'll just pop 4% investments here. And this is one of the figures that you wouldn't ever have an adjustment to in these questions. So that 180,000 I can pop straight over into my third column here. Okay, so that's just going to save us a little bit of time at the end. If the ones that you won't have an adjustment to, you pop straight in. Okay. Stock 1st of the 1st, 2022, that's opening stock. Again, never any adjustment to that, so I'll pop it straight in. Okay, sales then, up at the very top. So that is 1,848,900. Purchases goes into my cost of sales, 1,193, 500. Salaries and general expenses, 136,400. So that goes into my admin expenses. 136,400. Okay. Advertising goes under selling and distribution costs. The reason being that advertising helps you to sell your products. Okay. So it helps people to know about your products, which helps you sell them. So that's why it's a selling cost. So people always are a bit confused about where to put certain expenses. So essentially, anything to do with selling or distributing your products specifically goes under selling and distribution costs. Okay, so there's only a few expenses that go under this one. So examples would be, well, advertising, as we have here, because that helps you to sell your products. Another one would be the depreciation on delivery vans, because that helps you to deliver or distribute your products. Any bad debt written off, any kind of bad or increase in bad debt provision would also go under here, because bad debts relate to when we sell goods on credit and we don't get paid. So that would be seen as being a selling cost. Okay, so those would just be a few examples of the ones that you'd see there. And then essentially, if you just ask yourself, does this expense relate to selling or delivering my products or distributing my products in any way? And if it doesn't directly relate to that, then it's going to go under admin. So that's how you're going to know where to put the different expenses. Okay. So hopefully that's helpful. Okay, so we've got investment income received here, 2,200. So that's going to reduce the amount of the investment income we have due at the end of the year. So we're going to come later and work out how much investment income we've actually earned during the year. That'll go into my trading profit and loss. Then we're going to take away how much we actually received. The remainder then will be a current asset, because that's investment income that we're still due by the end of the year. So I'm going to put under my current assets here, investment income due. I'm going to open up a bracket. And whatever we've received is going to reduce that amount that we're due. So I'm going to put this 2,200 in here as minus 2,200. Okay. Excuse me. So that's that one done. Drawings go into my capital and reserve section in my balance sheet. So they're going to reduce the amount of capital that the owner is entitled to. They're going to reduce their ownership stake, because that's when the owner takes money or goods or anything like that out of the business for their own personal use. So that's going to be a minus figure in this question when we get to the end. Okay, so I'm just going to pop that in there, 45,000. Rates are an admin expense. They're fees we have to pay to the local council. So under admin expense, rates 42,800. PAY, PRSI, and USC. So with these three here, you can see I have a little box put around them. So these are ones that you just always have to look at which side they're on to know if they're a current asset or a creditor falling due within 1 year. Okay, so if they're on the debit side, current asset. Okay, so you might remember that this is my debit side and this is my credit side. On the debit side, you can have assets, expenses, and on the credit side, you can have liabilities, income accounts, income, revenue, sales. They all mean the same thing essentially, and capital and reserve accounts. Okay, so all of these three here, if they're on the debit side, they're going to be a current asset. If they're on the credit side, they're going to be a liability, a creditor falling due within 1 year. Okay, so as you can see, all these three are credit side. So they're all going to be under creditors falling due within 1 year. So PAY, TRSI and USC 4,700. VAT 11,900. Bank 53,600. Okay. 3% fixed mortgage. That's my creditor falling due after 1 year. That's a long-term loan. So that goes under here. Creditors falling due after 1 year. 3% fixed mortgage. Again, you don't really ever have an adjustment to this one, so pop it straight over into your third column, 320,000. Okay. Mortgage interest paid for the first 4 months, so that is going to affect how much mortgage interest we have due at the end of the year. So under creditors falling due within 1 year, I'm going to put mortgage interest due here, open up a bracket, and this is how much we were actually paid during the year, so that's going to reduce the amount that we have due by the end of the year. So put that in as a minus figure here, so minus 2,300 there. Okay. Debtors are a current asset, 67,700. Creditors are current liability, so creditors 98,600. And then bad debt provision. So that goes under your debtors here. So bad debt provision. So that's going to get taken away from your debtors. So I'll pop that in here. 2,100. Okay. Capital then obviously goes into capital and reserves. So capital here, 762,000. Okay, so that's my step 2 done, to transfer everything from my trial balance into my accounts. Okay, next step then, I'm going to work out my investment income and my mortgage interest. Okay, so I'm just going to go to my trading profit and loss, and down at the very end here, I'll start with the investment income. So if I open up a bracket here, I take the final amount there, the 180,000. Okay, multiply that by 4%. And these were only acquired halfway through the year, so the 1st of July 2022. So I'm going to multiply by 6/12 then. Okay, let's see what that gives me. So 180 times 4% times 6/12, 3,600. So I'll pop that over here. And then that's going to increase the amount, so that if I just add that onto my work in here for, sorry, not that one, the one up here for investment income due. So I'm going to need to get the net of how much we earned, which is the 3,600 minus what we paid, but there's usually another adjustment to come later on for these, so I'm not going to close off this one just yet. Okay. The interest now, so the mortgage interest. So here we have 3% fixed mortgage, including 50,000 issued on 1st of June 2022. So the closing balance at the end of the year is 320,000, but we only got an extra 50,000 issued on the 1st of June. So prior to the 1st of June, we only had 270,000 worth of mortgage. Okay, so for our interest, we'll just split it into 2 periods. So we're going to take 270,000 times 3%, and then times, so that's until the 1st of June we got the extra amount. So it was for 5 months before that we only had 270. So January, February, March, April, May. So we'll multiply by 5/12 for this part. Okay, and then we'll add on 320,000 then we had for the remainder of the year, times 3% times 7/12. Okay, so we'll work that out. So 270 times 3% times 5 over 12, 3375 plus 320 times 3% times 7 over 12. So altogether that's 8975. Okay, so I'm going to go equals 8975 there. So I won't close that one off just yet because there could be another little adjustment there as well. Okay. So that's my step 3 done. So to work out my investment income and mortgage interest, I'm just going to transfer that 8975 in here now as well. So to my mortgage interest due figure. So I'll just go plus 8975 here. Okay. So that's through step 1, 2, and 3 done. Next thing I'm going to do is to start looking at my adjustments then. Okay. All right. Okay. First adjustment. So stock at cost on 31 December 2022 was 82,600. So that's my closing stock, okay? So I'm just going to come to my cost of sales working here, and where I have less closing stock, I'm going to open up a bracket and I'm going to pop 82,600 here. This figure includes damaged stock, which cost 5,800, but now has a net realizable value of 75% of cost. So stock has to be valued at the lower of cost and net realizable value. So currently it's in a cost, but net realizable value is lower. NRV is only 75% of that. So if I come back here, I'm going to take away that 5,800. I'm going to add on the right value. So that's going to be 5,800 times 75%. So I'm adding back 4,350 then. Okay. So plus 4,350. Second one then, goods purchased on credit from a supplier were in transit on 31 December 2022. The invoice for these goods had been received for 15,375, which included VAT at 23%. No record was made in the books in respect of this transaction. Okay, so we purchased goods essentially. We made a purchase. The supplier has shipped them to us, but they haven't reached our premises by the year-end date, okay? But essentially, when the supplier actually did ship them to us, we're going to assume that ownership has been transferred to us at that point. So essentially, we now own the goods, and we now owe the full amount of the invoice to the supplier, okay? So we're going to I'm just going to go through how we're going to slot these figures in now. So to the supplier, we're going to have to pay over to them the full amount of this invoice, 15,375. So I'm going to go down to my creditors here, and I'm going to go plus 15,375. Okay. Now that includes VAT at 23%, okay? So I'm going to go up to my VAT here, and if we just work out how much that VAT is first, so it's going to be 15,375, and we're going to say that 15,375 is going to be equal to 123%. So if I divide by 123 and multiply by 23, that's the VAT amount then, 2,875. That's the VAT element of the invoice. And since this is a purchase that we've made, then this is VAT on purchases. Now, VAT on purchases reduces the amount of VAT that we're going to owe to the government. So if we had a VAT liability, this is going to reduce the amount of that VAT liability. If we had a VAT asset, it would be increasing the amount of that VAT liability, okay? But if you see, or of that VAT asset, excuse me. So, but if you see here in this question, if you remember, VAT was on the credit side, meaning it was a creditor. This is VAT on purchases, which isn't included in this amount. Okay, so we're going to minus that 2,875. So always think if it's VAT on purchases, then it's reducing the amount of VAT you owe to the government. And then if it's VAT on sales, it's increasing the amount of VAT that you owe to the government, okay? So that's the way to think about that one. Now, we just need to adjust our purchases and our closing stock, okay? So this relates to purchases that we made during the year. And we want to increase our purchases by the cost amount of these. So the cost amount is going to be the amount excluding the VAT, okay? So that's going to be the 15,375 divided by 123 multiplied by 100 gives us 12,500. So I'm going to add that onto my purchases. Now, since we own this stock at the end of the year, that's also going to increase my closing stock. I also need to include it in my closing stock. Okay, so plus 12,500 there. That's that adjustment dealt with. Okay, next one is on depreciation on delivery vans. Provide for depreciation on delivery vans at the annual rate of 20% of cost from the date of purchase to the date of sale. On 30th of September 2022, a delivery van, which had cost €35,000 on 30th of June 2018, was traded in against a new van which cost €80,000. An allowance of €3,000 was given on the old delivery van. The bank transfer for the net amount for this transaction was entered correctly in the bank account, but was incorrectly treated as a purchase of trading stock. These were the only entries made in the books in respect of this transaction. Okay, so how are we going to deal with this one then? So if we just take this one step by step, okay. So the first step that I would recommend for this, okay, is to fix the purchases, because that's not too difficult of a one to fix for this, okay. So it says that the bank transfer for the net amount of this transaction was entered correctly in the bank account, so we don't need to worry about the bank account, but it was incorrectly treated as a purchase of trading stock. So when we buy a delivery van, that is a fixed asset. That needs to go into our balance sheet. A delivery van is not a purchase of trading stock, because we're going to assume that we don't sell delivery vans here. Those aren't our trading stock, okay? Trading stock is whatever goods that we sell in the ordinary course of business, okay? So we're going to take that out of our trading stock. So the net amount of the transaction. Okay, so we're going to minus a figure from our purchases. And if we work out what that is, so the cost of the new van was 80,000 and the allowance was 3,000. So 80 minus 3, so the net amount is 77,000. So that's what I'm going to take away here. Okay. Right. So the next step then after I fix the purchases is going to be to fix the van's cost. Okay. So very simply here, we disposed of an old van and the cost of that old van was 35,000. So we need to get that 35,000 out of here. Okay. And we just need to add in the cost of the new van. So it's going to be minus 35,000. And then the cost of the new van was 80,000. So we just need to add on 80,000 here. And that's that one. Okay. Next step then, we're going to work out the depreciation for the year then. Okay. So if I go to here, depreciation on delivery vans is going to be a selling and distribution cost. Okay. So if I write depreciation on delivery vans, and I'll open up a bracket. Now, the only adjustment that was made in the accounts in respect of that transaction was incorrectly including the delivery vans in the trading stock. Okay, so we can assume that this 480,000 here is what was there in the delivery vans, okay, prior to this situation here with the disposal, okay? So if we split it into essentially kind of two periods, so we're going to take the 480,000, which was the cost up until the 30th of September 2022. Okay, we're going to multiply by, so it's 20% is the is 20% of cost is how delivery vans are depreciated in this company. So if we multiply by 20%, okay, and then we're going to multiply by 9/12 because that was the cost up until 30th of September 2022, which is 9 months. Okay, so if we multiply by 9/12, and then we're going to add on the depreciation for the rest of the year then. So the depreciation for the rest of the year is going to be based on 20% of the new cost, and the new cost is 480 minus 35 plus 80, so the new cost is 525. So it's going to be 525,000 times 20%, and that's for the rest of the year, so that's multiplied by 3/12. Okay, we'll work out what that is. 480 times 20% times 9/12 plus 525 times 20% times 3/12, giving me 98,250. So I'll slot that in here, 98,250. Okay, that's that part done. Next part we'll do then is to work out the profit or loss on disposal. Okay. So this is probably the only one where I'd recommend going to a little separate working away from the brackets on the face of your accounts to do, okay? Because the reason being that we need to work out if it was a profit or a loss on disposal to know where to put it. If it was a profit, we're going to put it under our ad operating income. A loss is going to go under selling and distribution costs, okay? So I'm going to go working one, profit or loss on disposal of van. Okay, so I'm going to have to take the cost of that van. I'm going to have an accumulated depreciation on that van, and I'm going to have a net book value. I'm going to compare that to the allowance that we got when we traded in that van, and then that's going to give me my profit or loss on disposal at the end, okay? So the cost then, the cost of that van was 35,000. We're told that here. Okay. Depreciation is 20% of cost from the date of purchase to the date of sale. So I'm going to have to take the cost of 35,000. I'm going to multiply it by 20%. And I'm going to multiply that by a certain number of months all over 12 to get my accumulated depreciation. Okay, so if we look here, we're doing accounts for the year end 31st of December 2022. We bought this van on 30th of June 2018. So we had it for 6 months in 2018, 12 months in 2019, 12 months in 2020, 12 months in 2021, and we disposed of it on 30th of September 22, so 9 months in 2022. So I'll just add up all those months. 6 plus 12 plus 12 plus 12 plus 9, 51 months, okay? So it's going to be multiplied by 51/12. Okay. 35 by 20% by 51/12. I get 29,750. 35,000 minus 29,750 gives me a net book value of 5,250. Allowance was 3,000. Okay. So we'd a van that we were valuing at 5,250. We were only given 3,000 off the cost of the new van. That's a loss of 2,250. Okay. So that is going to go into my selling and distribution costs. Okay. So I'm going to say loss on disposal of van. I'll just put in brackets here working one, so just to refer to the examiner where to see how you work that out. and it's 2250. Okay, so 2250. Okay. Last thing then is to just fix our accumulated depreciation then. Okay, on the delivery vans. So we started off with 70. We want to add on the depreciation for the year. So that was 98,250. And we want to take off the accumulated depreciation on the van we disposed of. So that was 29,750. I'll just put working one in brackets after that as well. See where we got that figure. And that should be my accumulated depreciation worked out there. So I'll just add those up at the end. Okay. That's number 3 done there. So whenever you're doing that one, just take it in those 5 steps, okay? And you should be fine. Right. Next one then. So suspense. Okay. The suspense figure arises as a result of the incorrect figure for mortgage interest, although the correct entry had been made in the bank account, and discount received of €600 entered only in the discount account. So the best way to do the suspense adjustment here is just use the trial balance on the first page here to help you, okay? So we're told, first of all, some of the suspense figure relates to the incorrect figure for mortgage interest. So if we look at our mortgage interest figure here, it says mortgage interest paid for the first 4 months, 2,300. So we're being told 2,300 is incorrect. So we're just going to have to work out what should 4 months mortgage interest actually be, okay? So if we take our mortgage, so this is for the first 4 months. So for the first 4 months, this extra 50,000 wasn't there yet. So we're going to take 270,000. Okay, times 3%, times 4 over 12, gives us 2,700. So this 2,300 should actually be 2,700. So we need to add 400 onto the debit side there. Now, if we've added 400 onto the debit side, then these sides aren't going to equal my debit and my credit in my trial balance, and they have to equal, okay? So what I'm going to do is I'm going to go up to where my suspense account is here, which is incorporated within salaries and general expenses. And I'm going to add 400 onto my credit side. Okay, now we're back to equal sides. Right, next part. So we are told there was discount received of 600 entered only in the discount account. Okay, so if we receive a discount, we receive a discount from our suppliers, okay, or our creditors, and that essentially reduces the amount that we owe to the creditor. So I'm going to go to my creditors here, which was 98,600 on the credit side. So I'm just going to deduct 600 from that, so 600 from my credit side. Now, if I minus 600 from my credit side down here, then I need to go plus 600 up here. Now we're back to equal sides again. And that is my suspense adjustment dealt with, okay? So that's the easiest way to try and get the suspense adjustment correct, all right? So I'm just going to pop these adjustments into my accounts, into my workings. Right, so first one was to do with the mortgage interest, right? So this 2,300, okay, minus 2,300 is incorrect. So what I actually am going to do is just cross that out. And I'm going to put minus 2,700 here instead. And then what I'm going to do is I added 400 onto the credit side here. So that's essentially the same thing as reducing this debit by 400. So I'm going to go up to salaries and general expenses. And it's going to be minus 400 from here. Okay. Then the discount part, I'm taking 600 off my creditors. So creditors, minus 600 there. And I need to add 600 to the credit side on my suspense as well. So that's going to be minus 600 here. Okay, that is my suspense adjustment dealt with. Okay, next one. Patents incorporating 2 months investment income are being written off over 10 years, which commenced in 2020. Okay, so for this one, there's no reason that 2 months of investment income should be included in patents, okay? So that is an error that we're going to have to adjust for, okay? So investment income, okay, we're going to assume that this relates to investment income that we've received during the year. Now, it doesn't explicitly tell you that, but if you look back over old exam papers and you see this adjustment come up and then you look at the marking scheme, then that is what's going on here. So just from experience with other exam papers, you just kind of need to know that if this comes up, that's what it is. It's investment income that we've received, but we haven't taken account of that yet, okay? We've put it into patents by mistake. Okay, so when we receive investment income, that reduces the amount of investment income due we have. So it's reducing our current asset. And to reduce an asset, we credit an asset, okay? Increasing an asset, you debit it. And to reduce an asset, then you credit it. Okay, so then when this was put into patents, it would have been credited to patents, okay? And that would have reduced the value of these patents. So to essentially take it out of patents, get patents back to where they should be, we need to add whatever 2 months of investment income is back to our patents, and that's going to fix our patents then, okay? So if we work out what 2 months of investment income is, so I've got my investments here, so it's 188,000. It's going to be by 4%, and it's going to be by 2 over 12. So that's 1,200. So I need to add 1,200 onto my patents. Okay, and then I need to put it where it should be. So it should be affecting my investment income due. So that's a payment of investment income we haven't taken into account yet. So we're going to have to reduce the amount of investment income due at the end of the year by 1,200. Okay. So that's that one dealt with. Sorry, that's the error part dealt with. We just need to deal with the write-off now. Okay. So when we write off patents, it's kind of like depreciation for an intangible asset. That's essentially what it is. So it's going to go into our admin expenses. So I'm going to write patent written off here. Sorry, patent written off. And then I'll just work out what that is. Okay, so they're being written off over 10 years. And that commenced in 2020. We're doing accounts for the year end 2022, okay? So they were written off by 1 year in 2020, then they were written off by a second year in 21, and we haven't done 22 yet. So there's 2 years of write-off used up out of a total of 10. So we've got 8 years left over. So it's gonna be my correct patents value, okay, which is the 48,800 plus 1,200. So correct patents value is 50,000. So 50,000 divided by 8 years remaining. Okay. So 50,000 divided by 8 is 6,250. Pop that here. The write-off is reducing the final value of my patents in my balance sheet. So I go minus 6,250 there. Okay. That's that adjustment fully dealt with. Okay. Next one. Goods taken by Leahy for his own personal use during the year were not recorded. So anytime we see that word personal use, or the other time you might see it might say private, we're immediately thinking of drawings. So that's when the business owner takes money or goods out of the business for their own personal or private use. So that's essentially reducing their ownership stake in the business. So that goes into drawings, which is down here in my capital and reserve section. Okay, so the goods had a retail value of 3,600, which is cost plus 20%. So we're going to increase our drawings by the cost price of these goods. Okay, so I'll go to drawings and I'll go plus. So it's going to be 3,600. I'm going to divide it by 120. I'm going to multiply it by 100. And that's going to equal, so 3,600 divided by 120 multiplied by 100 is equal to 3,000. Okay, so my drawings is being increased by 3,000, and we're told that this happened during the year. So this relates to goods that were purchased during the year. So we need to take this out of our purchases. So I'm going to go up to purchases and I'm going to go minus 3,000 there. Okay, that's that one dealt with. Okay, the company revalued the land and buildings at 950,000 on 1st of January 2022. The land element of this new value is 200,000 euro. The revaluation has yet to be reflected in the accounts. Buildings are to be depreciated at the rate of 2% of cost per annum. Okay, so when we have a revaluation, the new value of the buildings essentially becomes our new cost price. So when we revalue, we're going to completely eliminate this old cost, and accumulated depreciation also resets to zero when you have a revaluation. Okay, so our new cost is going to become 950,000. Accumulated depreciation is now zero. Now I can work out my depreciation for the year. That's on buildings, that's going under admin expenses. Depreciation on buildings. I'll open up a bracket. I'll put 200 and, what's the new value? Oh yeah, so that includes land of 200,000. So we don't depreciate land. So it's going to be 950,000 minus 200,000. 200,000 times 2%. So let's work out what that is. So 950 minus 200 is 750 times 2%. 15,000, okay. Pop that into my accumulated depreciation here. So that depreciation for the year, so this revaluation happened on the 1st of the 1st. So that 15,000 of accumulated depreciation for the year is the only depreciation we've accumulated now since the revaluation. So that's my new accumulated depreciation at the end of the year. Okay, last thing for this one now is to work out how much to put in our revaluation reserve. So we can clearly see, right, that the old value of the buildings was 850 cost minus 105 accumulated depreciation. Now we're valuing them at 950, so clearly that's a revaluation increase. It's a gain on revaluation. Anytime we have a gain on revaluation, that goes into an account we call revaluation reserve, and that's down in my capital and reserve section. Okay, so I'm just going to open up a bracket here, and essentially we just need to compare the new value to the old net book value. Okay, so it's going to be the new value of 950,000. Then that's going to be minus, and I'm going to get the old value. So the old value was 850,000 minus, what is it? 105,000 was the old accumulated depreciation. So let's compare those two. So 950 minus, in brackets then, 850 minus 105. That is a gain on revaluation of 205,000. So I'll pop that in here. Okay. So that's that one dealt with, this one here. Okay. Next one then. The figure for the bank account in the trial balance have been taken from the firm's own records. However, a bank statement dated 31st of December 2022 has arrived, showing a bank overdraft of 50,300. A comparison of the bank account and the bank statement has revealed the following discrepancies. A credit transfer for €1,500 had been received on 31st of December 2022 in respect of a €1,700 of a debt of €1,700 previously written off as bad. The debtor has agreed to pay the remainder within 2 months. No entry was made in the books to record this transaction. Okay, so there's a credit transfer here of 1,500 that we haven't taken into account of, right? So that we didn't really know about by the end of the year. So that's gonna get that's gonna affect our bank balance then. So my bank was on the credit side of my trial balance, meaning it was a bank overdraft. It was a creditor falling due within 1 year, because essentially a bank overdraft means that this bank here figure is actually a minus figure. It's minus 53,600. There was a transfer we received of 1,500, but we hadn't taken into account, like maybe we missed it or didn't know about it by the end of the year. So that is gonna reduce this bank overdraft figure. So I'm gonna go minus 1,500 there. Okay, and that was received in respect of a debt of €1,700 previously written off as bad. Okay, so there was a debt of €1,700 previously written off as bad. We've received 1,500 so far in relation to it, and the debtor has agreed to pay the remainder within 2 months. Okay, so that €1,700 that was previously written off as bad is essentially, it's now recovered. We thought that we weren't going to get it. It turns out, oh, we were wrong. We actually are going to get it, so that's good. And then we call that bad debt recovered is the proper name for that, and that goes into my add operating income section. So I'm going to say bad debt recovered, and it's 1,700. Okay, so I'll pop that in here, 1,700. So the full amount is recovered because we've received 1,500, and we are going to receive the other two, the remainder, which is 200 as well. So that 200 that they've committed to pay with us within 2 months needs to be added onto my debtors then, because we're expecting to get it, but we haven't gotten it yet. So it's going to increase my debtors by 200. That's that one dealt with. There was also a check for 1,800 issued to a director that had not yet been presented for payment. So we've taken that out of our bank figure here, out of our bank balance. And we were correct to do that because we essentially need to make sure that that money is there when the director does go to cash that check. So it's correct for us to include in our accounts that, like, we've taken out that 1,800. The bank just doesn't know about it yet because the director hasn't gone to the bank to cash the check yet. Okay, so we actually don't need to adjust our accounts at all for that. So yeah, if you just don't do anything there, you're getting marks, which is good. You're getting marks for basically not doing anything. So that's happy days. Right. We can do a quick check to see that we've done this right. So on one side here, I'm going to put TB for trial balance and then BS for bank statement. Okay. I'll take what I started off with in my trial balance for bank, which was 53,600. I'm taking off that 1,500 credit transfer. My new bank overdraft figure is 52,100. The bank statement had an overdraft of 50,300. But then when that director goes to cash that check for 1,800, that bank overdraft is going to increase by 1,800. Okay, 50, so that should be plus. So 50,300 plus 1,800 gives a new overdraft figure in the bank statement of 52,100. These two figures are reconciling now. So that tells us that that working is correct. So there's no marks in the exam for actually doing this, but it's just a check that you can do for yourself to make sure that you've done everything right, okay, for that working. Okay, that's that one done. Last one, provision should be made for the following: investment income due and mortgage interest due. So I'll just close off my investment income due working here. So it's going to be minus 2,200 plus 3,600 and then minus 1,200. That gives me 200 I still haven't received, okay? Mortgage interest due, I'll close off this one. Minus 2,700 plus 8,975 gives me to 6,275. Pop that here, 6,275. Okay, 20% of mortgage interest for the year refers to the private section of the building. So that's drawings as well. So the business is essentially kind of paid some of the private mortgage element of the business owner. They've essentially paid that on his behalf. So that's essentially drawings as well. That's money he's taken out of the business to pay for something for his own personal use. So that's going to increase my drawings, okay? And it's 20% of the mortgage interest figure, which was 8,975. So 8,975 times 20% equals, what am I getting there? 1,795. So I'm going to increase drawings by 1,795. And then I just need to take that off of my interest expense for the year because it's not actually relating to the business. So I'm going to go minus 1,795 there. Okay, that's going to give me the correct interest figure. So I'll just tot that up quickly. So that's 8,975 minus 1,795. So 7,180 was the final interest figure there. Okay. So that's first one dealt with. Second one then, provision for bad debts to be adjusted to 6% of debtors. So for this one, I'll update my debtors figure. So that's going to be a new figure of 67,900. We need 6% of that for our new bad debt provision. That's 4,074, which is going to get taken off my debtors here. Okay, but my old provision there was 2,100. So clearly that bad debt provision has gone up. So an increase in the bad debt provision goes into my selling and distribution costs. A decrease would be in income, so it will go under add operating income, but it's an increase here, so it goes under selling and distribution costs. Okay. Increase in bad debt provision, and that is 4,074 minus 2,100. That gives me 1,974. Okay. That's 2 done. 3, equipment to be depreciated at 10% of cost per annum. Okay, so depreciation on equipment, that goes under admin expense. The cost for equipment was 153,500. 153,500 times 10%. That's going to be 15,350. I'll add that onto my accumulated depreciation. So that's going to be my accumulated depreciation actually, because I didn't have any there to start in my trial balance. So I'll just pop 15,350 in here. That's all my adjustments dealt with there for this question. So very last step now is to just tot up my totals. Okay, so I'll start with the trading profit and loss. So we had no adjustment to sales. So that's just going to be 1,848,900. We had no sales returns. So my sales figure, final sales figure is 1,848,900. Purchases, so opening stock, no adjustment purchases. So 1,193,500 plus 12,500 minus 77,000 minus 3,000 gives me 1,126,000. No purchase returns here. Closing stock 82,600 minus 5,800 plus 4,350 plus 12,500. 93,650. So that gets taken away in my cost of sales formula. Okay. Let's add up all those to get my total cost of sales. 70,700 plus 93,650. 1,103,050. So that's getting taken away from my sales to get my gross profit. 050. Let's get my gross profit then. So gross profit 745,850. Okay. Expenses, no adjustment to advertising. So I'll get my total selling and distribution expenses now. 16,000. 118,474. Salaries and general expenses. 135,400. Rates didn't change. Let's get my total admin expenses now. So 214,800. Add these two together. Total expenses 333,274. Sorry, 274. Okay. Now, get my gross profit minus my expenses. 412,576. Okay. Discount didn't change, 7,700 plus the 1,700, so that is 9,400 plus the 576 plus 9,400. So my operating profit is 421,976. 76. Add on my investment income of 3,600. Take off my interest of 7,180, and then I get 418,396 as my net profit. 418,396. Okay, let's finish off my balance sheet. Patents. 43,750. Land and buildings 950 and 15,000. 950 minus 15 is 935. Okay, delivery vans 480 minus 35 plus 80, 525. accumulated depreciation is 138,500. That gives me 386,500 here. Equipment cost is 153,500. Okay. Sorry, 153,500 minus the 15,350. 138,150. Okay, I'll just add up these 3 columns. I can close off these 2 because I'm done with these now. Now I can add up these 3 here to get my total tangible, or sorry, my total fixed assets. Okay, so 43,750, 1,459,650 plus 180, 168,400. Okay, I can take my closing stock from the trading profit and loss, so 93,650. 93,650. Just get my net debtors figure here. So get the 67,900 minus the 4,074. Sorry. Sorry, excuse me. 67,900 minus 4,074. 63,826. Okay, I'll add up these 3. 157,676. Okay. No adjustment here to PAYE. VAT. $9,025. Bank is going to be 52,100. Creditors. $1,375. I'll add up all these. $185,475. So I'll get my current assets minus my current liabilities. So 157,676 minus 185,475, 27,799 minus figure. Okay. So take my total fixed assets of 168,300 minus my 27,799. I get 1,655,601. Okay, it's my total net assets. Okay, just add up this section. So 762,000 for my capital didn't change. Net profit is going to be per the trading profit and loss, which was 418,396. 418,396. Drawings then. Okay, I've got 45,000 starting off, plus 3,000 plus 1,795. 49,795 I have to take away here, so 49,795. It's a 9 there, if you couldn't tell. Okay. So I'll add up all these. So 762 plus 205 plus 418396 minus 49,795 gives me 1,335,601. Okay, plus my mortgage of 320,000 gives me 1,655,601. Okay, which is equal to so my capital employed here is equal to my total net assets that I got above there. So that's how you know that you've got the question fully right. So that is that question fully done there now. So you can see both sides there. So this side and my balance sheet as well. Okay, so hopefully you found that helpful, and thanks for watching.